Yeah, it was a good quarter. They had a solid top line. The operating income beat significantly. Really, actually, the only knock on the quarter was next quarter. Looking at the guidance for operating income, they guided below consensus. But if you look at the last 4 quarters, they've beaten their guidance by an average of 71% over the last 4 quarters. So
Wow.
it's probably the case that operating income guidance is still likely conservative. There is the expense, as you mentioned, of adding in $800 million of fulfillment costs for the one-day shipping, but we think that's money well spent.
Sure. So tangentially, by the way, if they pair up with Sinclair for these regional sports networks, is that a big deal for you? For Prime Video in general, how much of a mover is that going to be for the stock?
Yeah, if you look at these streaming services, one of the things they've really missed so far is having sports content. There's a lot of dollars that are switching over from traditional TV content over to streaming services, and sports has been kind of the missing link there. So, we haven't seen Netflix have it, Hulu, Apple, any of the other services. So to the extent Amazon can add that in, it'll give them a differentiator for Prime Video.
Michael, you had pointed out that Amazon has beat guidance, et cetera, but it's really never how much they beat in the quarter that really moves the stock. It's really their outlook on spending. And somehow this time around, Wall Street is okay with the additional spending. Why do you think that has sort of changed in this environment?
Well, I think in this case, especially since the spending is for something that I would call miraculous with free one-day shipping, it's just viewed as a way that they can continue to increase their escape velocity versus competitors. I can't imagine how frustrating it would be to be one of their competitors who's been just sprinting to catch up to free 2-day shipping, and now they get this bomb dropped on them that Amazon's going to one day.